All right, welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in here on this, I don't know, this holiday shortened week. Let's say holiday interrupted week. That's probably more like it, right? Just got back myself here too, so I had some good time off, back in the saddle again. And like I said to Tammy, I'm screwing up like I'd never left. So I like it that way, right? Let's take a look and see what these markets are doing now that we're open. And we got a 4-cent better bid in corn. I like that. 4.25-cent better bid in March corn. Look at this, 4.58 is last. That's just to tick off the high of the day. We've already had a 5-cent range. Maize up 4.25 cents to 4.65 on its own, and that too is just to tick off the high. And we've had about a 5.25-cent range there as well. So not bad. Corn still leading the way here with some of that demand story propping up prices. Let's take a look and see what soybeans have got for us. They got a 10 handle on most things here except for Jan. Jan's up 10.75 cents to 9.90 March is up 11 cents to 10.75, while May, that's up 10.5 cents to 10.11 even. So another decent board here for beans as it tries to catch up. We've had a good demand story. There's been some folks talking about a big bean, a lot of beans coming out of South America. We'll see if that happens, but this one's not believing it right now. It's doing some decent catch up. Let's take a look and see what it might also be the fact there's no sellers right now, right? We're going to kind of pry it away from the farmers' hands. Chicago wheat up about 6 cents across the board. 5.25 cents better bid in March. 5.52 last there. We got a May board up 5.75 cents to 5.62.5, and that's about 2.75 cents off the high of the day. And we've had almost a full dime range, so that's not too bad. July, that's up 6.25 cents to 5.70, just 2.5 cents off the high of the day. Hard red, Kansas City. What's going on there? 5.25 cents better bid in the March. 5.59 is last there. Kind of settling back into the middle of a 10-cent range. Not bad already, boy. We've been busy. May's up 5.25 cents to 5.68 even. July, 5 cents better there, 5.76.5. Spring wheat, let's move there to March. 4.75 cents better bid, $6 even. We've got a 6 handle in front of it. We're still 1.25 cents off the high of the day, so that's not bad, right? 4.5 cents better bid in the May to 6.07 3/4. And we'll finally kind of take a look and see what the cotton's doing and get to our guest analyst who's been so kind to be in studio with us. 12 points better bid in cotton. That's a quiet trade. 69.01 is last, trying to put a 70 handle back on that one. 69.01 is last, 12 cents better bid. That's March cotton. All right, let's bring him in. Mr. Tommy Grisafi, he's now an in-towner, so we're going to see more of you maybe. Thanks for coming on. What's top of mind? What's the big story?
Natural gas up 19%. I was going to tell you, I wrote down it's up 17. It went up another 2% walking in here. That's about what some of these grains are down on the year. When people say, can grains rally? Yeah, they could rally. Did analysts get it wrong? Absolutely. I mean, everyone you have on, not everyone, a lot of people you have on are telling you all the reasons why we're going to go lower. In the end, we went higher, and we're going higher currently today, and we got the government money. I heard on the first hit, you're like, what do you think of the government money? Government wants to give you money, take it. Are you going to say no? I mean, not many people sending back the check and showing them, right? So you take the money and you add that to your sale. When you read that corn board, with this cold, natural gas is up because it's going to get extremely cold the second week of January. When it gets that cold, sometimes trucks don't start. It's a real problem in logistics. And so the market wants your corn right now.
I love it. Everybody's excited about it getting cold in January.
Well,
I can just hear my father say it.
Yeah,
it should be cold in January.
This is
right?
really cold. Your father didn't have the internet, so he just went outside and it was cold, right? Right. Now with news forecast and AI, we know it's going to be cold 2 months before, and it scares us. But I wonder why the natural gas market didn't do that on Friday. Like, did we just figure out over the weekend?
That's why you have to. That's why he would see. He would say be skeptical. It just brings back those memories after a sweaty day trading in the summer in Chicago. I remember getting on that elevator and how uncomfortable and how bad it smelled, all the guys sweating. And it usually was because it was hot and dry and the markets were crazy. And I just remember my dad in the back of the elevator saying, gentlemen, there's a word for this weather that we're having in the English language right now.
Summer.
Yeah, so yeah. There's a word for the weather we're going to get in January, and that's called winter, right? So if it was 20 below in July, then we got something to talk about.
Yeah, the fundamentals are quite bearish in beans, but yet they're putting on 12 cents the last few days.
What do you think that is?
They're just doing it. There are no pits anymore. You and I have maybe in some ways less access to information because we had the advantage of being on the floor and watching those orders come in to your dad or other people and be like, oh, Cargill's buying. You could walk over and see the meats trade, whatever. We open up overnight. We have a quiet grind. I will say this. There was an incredible amount of farmers selling every penny on the penny tens and tens of millions, thousands of contracts trading every penny on the way up here. So big volume. I know we're saying, oh, it's holiday abbreviation. It's not that thin a volume. I mean, if you wanna crank out a couple hundred contracts right now, you'll get it done within a quarter cent. It won't move the market. Very deep liquid markets, and so the markets have went to a level that now people like me need to walk out of here, text clients, email clients, call clients, and say today's an actionable day.
Yeah, I agree. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to go back and talk more with Tommy Grisafi, this time about the meats. We'll be right back. All right, welcome back. Let's talk about some cattle futures, right? Let's take a look at live cattle now that we're open and up and running. What do we have in store for us over there? Well, we got a better board. We should get rid of December. I got to make sure I do that the next time. But Feb, that's up 62 cents to 191.27. And look at that, folks, 32 cents off the high of the day there. April's up 50 cents to 193.85. Moving over to the feeder cattle, what's happening with feeders? Well, let's take a look. Jan's up 47 cents. This is quiet, though. They haven't really kind of taken off. And you know what? I tell you what, this is probably pretty good in the face of what's been going on over in equity land, right? 47 cents better in Jan right now to 261.85, while March is up 70 cents to 261.25. All right, here we go. Lean hogs, what's happening with that? Well, here we go. We're a little bit easier. 85 cents lower in the Feb. 83.30s last, just 25 cents off the low of the day. We've had just over $1 range, about $1.10. April, that's down 65 cents to 88.87. And then finally May, that's down 90 cents to 92.72. All right, let's get back with him. Tommy Grisafi. Tommy, thanks for sticking around. What comes to mind when you take a look at those cattle prices?
Well, sitting in that chair Thursday and Friday, I got to talk to analysts all day, and every single person says the same thing. The fundamentals are bullish. We know that. And then we're all looking at each other saying, what don't we know, right? I can tell you from going out this weekend in Nashville that I can only afford steak if you're picking up the check. Otherwise, when I pick up the bill, it's a chicken or salmon.
There's
or
a finance window at the back of the bar.
So you sell some of your Bitcoin and then we buy steak. The price is probably going to a level that's going to hurt demand. I mean, you can see it at the menu. We had beef for Christmas. It was much more affordable to go buy it and cook it yourself. But if you want the whole fancy meal, like you with the steak and the wine and all the stuff you like to do, the decanter, all that, it gets extremely expensive. And I don't know how the consumer, as you know, you'll probably have it on your show today. We racked up some bills during Christmas on credit card debt. And so we are pushing the credit card debt to the max. Americans are being Americans. They're spending a lot. And
they're acting like government.
They're acting like government. One real quick thing. I know we probably got to go on break. The 10-year yield crept back up to 4.60. So you're telling everyone, oh, the Fed cut rates. Sure, the Fed cut the Fed funds. The long end's high. That is going to work against the cattlemen, not to mention what's happening in corn and meal and everything else here. That's probably what's hurting the hogs. Everything else is that meal price goes back up.
You're right, because I am going to talk about it later on this afternoon in the Cow Guy closing.
Say it again, you're right.
No, you're right. Yeah, there you go. This time.
This time.
Because we're going to talk about, this kumbaya versus kumbayuk. Okay, kumbaya is everything's going well. We've got Trump in office, and things are looking up. And there's something to that. But the kumbayuk is the fact that the Fed funds rate's been cut, but the 10-year yield's only gone straight up.
Right.
There's so many things out there that need to learn how to get along with each other. Like, we're going to have higher 10-year yields. What's that going to do to inflation? How are we going to fight inflation? And at the same time, we've got these interest rate cuts going on with the Fed. I mean, there's so many things that we're going to have to reacquaint ourselves with what it's going to be like to have people fighting for the dollar. If you really want to back the dollar, that means you can't back Bitcoin. And Bitcoin's been the flavor of the day. So this kumbaya where everybody's starting to really feel good, I'm thinking is going to be a little bit of kumbayuk until we start to get to, used to some of these things.
Do you have time to pull up Dow futures real quick?
Yeah, down 660.
Yeah, that's what I was going to tell people. They're down 600. Now, the crash of 87 was only down 500, but we've
percentage terms, yeah.
Percent. Right. So, but the Dow was at 2,500 when it went down 500. We're at 43,000. So watch that stock market year end. Mind yourself that natural gas went up 19% in a day. Commodities are extremely volatile, and I don't care if you say they're thin or not. The margin department wants your money if you're short natural gas.
Paul Tudor Jones, he's a big commodity guy. They're betting. They're going long commodities, that's for sure. All right.
Absolutely. Thank you.
Thank you very much for being on, Tommy. Tommy Grisafi. He's with Nesvick Trading. I almost said the other one. I'm glad I didn't. Thanks for coming in, Tommy. Hand it back over to Tammy.
All right. Good to see you guys. Thanks for that update.